Titans. Wow, that was quite the weekend for Bitcoin starting last Friday. But did we get the weekly candle close we needed to see? And is Bitcoin still looking bullish? Let's talk about all that and much more today. Kevart, hit that intro. Let's kick it off with the Crypto Fear and Greed Index. Just a quick note that although the name of this index would suggest that it's generally all crypto, the gauge primarily fluctuates based on the movement of Bitcoin. Today we're at 74, which represents greed after spending all of last week at the lower end of the extreme greed range right before we had a huge pullback heading into the weekend, but a good recovery right afterwards on Sunday. Now let's move on to your daily reminder that the Bitcoin halving is in just 4 days. Also note that the halving date is now currently estimated to be April 20th, and it's generally been fluctuating between April 19th and April 20th because, again, it's a moving date based on whenever the 210,000 blocks have been added to the Bitcoin blockchain. And for those of you who are new to crypto, this event marks the time in which the Bitcoin reward for the miners will get cut in half from about 6 Bitcoins to about 3 Bitcoins every time a block is successfully added to the Bitcoin blockchain. Moving on to the Bitcoin liquidation heat map. Just a quick reminder that this map tracks the short and long position liquidity for Bitcoin in areas that are either light or dark yellow. The yellow areas will either be above or below the current price action, which are the short and long positions respectively. Looking at the weekly time frame, there is a lot of liquidity building up just below 72K. And of course, knowing that Bitcoin always follows the liquidity, I would not be surprised at all if we got a short squeeze through 72K at some point soon. Now let's take a quick look at the Bitcoin ETF flow table. Just a quick reminder to anyone new to this table, we're tracking how much Bitcoin the institutions such as BlackRock, Fidelity, ARK Invest, etc. are buying to back their ETFs based on the millions of dollars they are spending per day against how much Bitcoin is being sold by Grayscale in millions of dollars as folks are switching out of Grayscale Bitcoin and into the ETFs. Friday, April 12th, we had a negative outflow total of $55.1 million. Note that the only institution who had any inflow that day was BlackRock at $111.1 million. But this was offset by the outflow from Grayscale, which was $166.2 million. Guys, this is your reminder that we are only 38 days away from a decision to be made by the SEC for the first Ethereum spot ETF by May 23rd. Don't sleep on Ethereum because you know what happened to Bitcoin leading up to the approval of the spot ETFs back in January. All right, now let's hit the charts. All right, looking at Bitcoin on the weekly time frame, we can see that yesterday's weekly candle, which is marked by this yellow arrow here, closed within the 65.5K to 69K support zone, and that was a very important thing that we wanted to happen, as we mentioned on Friday. If we had closed below that, then I would have expected to see a further price drop from where we are at right now. I also want to point out that we are continuing to find support on top of this purple line here, which is the 8 EMA, or exponential moving average. And we have been seeing the weekly candles close above this 8 EMA since September of 2023, once the price action really started flowing in an uptrend. So between yesterday's weekly candle close and maintaining support on top of this 8 EMA, we are still looking very bullish for the time being. Zooming in on the daily time frame now, the price broke below the bottom leg of the symmetrical triangle pattern that we were talking about for most of last week. So with this breakdown, the pattern is no longer valid. But overall, I think we are seeing a different pattern forming now, but it's not evident on this particular time frame. Zooming out a bit to the 3-day time frame, the pattern I'm seeing here resembles a bullish rectangle, which is a continuation pattern. You typically see these patterns occur following an uptrend in price, and then the price consolidates by going up and down in a set range before continuing upward again. And with the Bitcoin halving coming up in just days from now, we could potentially see the breakout/continuation occur right around that time because the previous halvings have always been the catalyst for parabolic price action since the demand for Bitcoin will increase with less being added to the circulation. Titans, we are your one-stop source for guiding you through this Bitcoin bull run. Please join us as we continue to provide the latest market and technical analysis that are going to give you that edge.